We'll be going over IRS Form 1040-NR, specifically the section of this tax form that has to do with income effectively connected with U.S. trade or business. So in a prior video, we've already gone over the taxpayer information at the top of the form. And in subsequent videos, we'll go over calculating other parts such as the tax and applicable credits, payments, refund, and the signature portion. So for this video, to make it easier to consume, we're going to focus specifically on lines 1A through line 15. These are the total amounts that are associated with income effectively connected with a U.S. trade or business. So we'll go through line by line. So there are passages to IRS Form 1040-NR, the instructions that talk about NR specific tax items, but a lot of those instructions also go back to the Form 1040 instructions, and we'll kind of make a distinction on which ones you should pay attention to. So, for example, line 1A, this is the total amount that you would see on your Form W-2. W-2 form is basically your typical paycheck. Like if you're a W-2 employee, that means that you have a salary, you're employed by an employer, you are not an independent contractor. So this is specifically if you completed a Form W-4 for an employer, you have benefits, or you have a salary. Those are all items that would be reported on your Form W-2. Now, specifically, we're talking about box 1 of your Form W-2. So that is the gross pay. And by the way, as an aside, we'll put links in the show notes to all the resources that are mentioned here that we've created so far. So, for example, W-2, if you need to get familiar with that, we'll put links to resources on Form W-2 here. So let's just imagine that John Doe, he earned $50,000 from wage income prior year. Again, box 1 in the Form 1040-NR instructions, it specifically, it does not have anything additional other than making sure that this is income from a U.S. source. So effectively connected with a U.S. trade or business. Don't include any income on line 1A that isn't connected or isn't treated as an effectively connected to a U.S. trade or business, even if it's listed in the instructions for the regular 1040. So there are certain amounts that could be exempt under a treaty. Those would not be reported on line A. Those would be reported on line 1K and completed on Schedule OI. So if you're talking about total income exempt by a tax treaty between the United States and another country, that income would go here in line 1K. So there are a couple of other special circumstances. Services performed partially within the United States and partially outside the United States. Fringe benefits. Those are all extra details that are addressed in the form instructions. So, you can check those out. You can check out our article if you need more detail. Line 1B, household employee wages that are not reported on a Form W-2. So generally speaking, household employer would be someone that hires a cleaning person to clean their house. So let's imagine that John Doe, I know in a previous example we listed him as qualified surviving spouse. Let's just say that he's got a side job where he cleans houses. He makes $200 a month. He visits a house once a month. So according to the form instructions, an employer is not required to provide a W-2 to a household employee if they paid less than $2,700 in wages during 2024. Line 1C is tip income that might not be reported to your employer. Also, any allocated tips reported in box 8 of your Form W-2. So allocated tips generally aren't included in box 1 of your W-2. You should also include the value of any non-cash tips that you receive. I'm going to go out on a limb and imagine that a lot of people probably don't do that, but that's what the form instructions say that you should do. So that's what you should do. In this case, we'll just say that John Doe doesn't have any tip income. Line 1D, Medicaid waiver payments not reported on your Form W-2. So specifically, according to the form instructions, this would be any taxable Medicaid waiver payments, also the total taxable and non-taxable Medicaid waiver payments that were not previously reported on the W-2. In line 1E, taxable dependent care benefits from IRS Form 2441. So if you have, dependent care benefits that were provided by your employer, maybe they paid an allowance or something, or provided some sort of employer-sponsored dependent care program, then you should see something reported in box 10 of your Form W-2. You would need to complete IRS Form 2441 to determine what of those benefits are taxable, and then you would report the taxable amount of those benefits here in line 1D. So let's just say that was $1,000. In line, wrong spot. We'll correct that in just a second. So in line 1E, we have taxable dependent care benefits. In line 1F, this is employer provided adoption benefits from IRS Form 8839, line 29. So you can possibly exclude part or all of your employer provided adoption benefits. You would have to go through IRS Form 8839 to determine how much of those employer provided benefits are taxable and how much of those are not taxable. So when you go through IRS Form 8839, it'll take you through all of it. Line 29 is the amount that is considered to be taxable. We'll see that doesn't apply to this situation because John Doe's daughter is not adopted. IRS Form 8919. So basically, that is a form that discusses uncollected Social Security and Medicare tax on wages. So if this usually doesn't happen. It might happen if you were an employee, but your employer considered you to be an independent contractor. So basically, they're telling you that you're receiving payments as a 1099 contractor, which means you would receive a form 1099, probably -NEC or -MISC. This would allow the employer to not have to pay Social Security tax for you. So if that's the case, you could be considered an employee, but your employer doesn't pay those taxes, and then you would need to file IRS Form 8919. So basically, that allows you to tell the IRS what you've done. There's a form that you can file to get the IRS to make a determination based on your job, what you do, whether or not you're an independent contractor or whether you're an employee. So the difference really is the employer pays part of the Social Security and Medicare tax on your behalf, as well as you do. So if you're an independent contractor, you have to pay both halves of that, whereas if you're the employee, let's imagine that your Social Security tax is $5,000. So if you pay your $5,000, your employer would pay a matching $5,000, and the federal government gets $10,000 total. So if you are an independent contractor, then you're essentially your own boss. So you would pay your $5,000, and then you would pay the other $5,000 because you are your own employer technically. So you would report any wages that Social Security taxes were not already withheld from, and that would be on IRS Form 8919. Line 1H includes other earned income. So there are a lot of different sources of other earned income. I'll briefly go through some of the more common ones, but basically, we're talking about other sources of earned income that would not be readily reported here, like on your Form W-2. It could be strike benefits. It could be excess elective deferrals. If you contributed too much to a retirement plan, then that might get kicked back to you. Certain disability pensions on IRS Form 1099-R if you haven't reached the minimum retirement age, and then corrective distributions from a retirement plan. So excess deferrals. If you contributed too much money and the plan kicks them out, then that would be reported here on line 1H. So let's just say that there's $1,000 there. In line 1I and 1J, those are reserved for future use. Technically, the line 1I on Form 1040 is a non-taxable combat pay election. So I don't think that applies to non-residents. In line 1K, we talked about that. This would be income that would have already been reported here, except for the fact that it's exempt by a treaty. So let's just say that there's nothing there. In line 1Z, we're going to add all of these items of income up. So we get $54,400, I believe. Now, the lines that follow this, these are not necessarily earned income, so you may need to pay taxes on this, but you don't need to pay Social Security and Medicare tax on it. So line 2A and line 2B have to do with interest. So if you have a checking account or a savings account, they might pay you interest. You could purchase savings bonds that also pay interest. There is tax exempt interest, which really has to do with state issued or municipality issued municipal bonds. They're generally free from income tax, and they may be free from tax in the state or locality that you live in. Whereas taxable interest, basically anything that you have in a checking account or a savings account, anything that's in a corporate bond or a U.S. Treasury bond under most circumstances, all of that's going to be considered taxable interest. So you would see these interest payments reported on IRS Form 1099-INT, that's interest income, or 1099-OID, and that's original issue discount, which refers to a specific type of bond. And if you meet certain criteria, you also have to report your interest income on Schedule B of your income tax return. There are a couple of exceptions that apply to non-residents. So do not include any interest that's not effectively connected with a U.S. trade or business. If it wasn't connected with a trade or business and it was from a U.S. source, you would report that on Schedule NEC. You also don't include any interest from a U.S. bank or financial institution that's exempt from tax under a treaty. So you would actually complete Schedule NEC on Form 1040-NR. So those are the items that you would complete. Generally speaking, American or resident taxpayers would file Schedule B to report this interest income. If you need to, you would file Schedule NEC to do the same. This also, so let's just say that there's $1,000 of tax exempt interest and there's $1,000 of taxable interest. Qualified dividends and ordinary dividends. So you're only going to report qualified dividends or ordinary dividends that are connected with a trade or a business. So if they weren't effectively connected with a U.S. trade or business, you're going to report them on Schedule NEC. So qualified dividends generally mean they're subject to a lower tax rate. You'll see a Form 1099-DIV, and usually box 1B will show the total qualified dividends, and then box or line 3B would indicate your total dividends. So you would report, let's just say that you had $2,000 of dividends. You would put the total amount here, but $1,000 of that would be qualified dividends. So the way I read this tax form is that John Doe received $2,000 of total dividends, $1,000 was qualified dividends. So really the ordinary dividend portion was the $2,000 minus $1,000, or $1,000 total. IRA distributions, you would receive a Form 1099-R. So that also counts rollovers. If you rolled over from one IRA to another, then you would technically receive a Form 1099, but it'll also be marked with a code that says that it's a rollover and it shouldn't be taxable. So what you would see is, let's just say that you did a $20,000 rollover. You would actually report it on your tax return. There's a way that tax software, you could type in rollover and you would put the taxable amount as 0. That would be a rollover distribution. So also, if you take a distribution from an IRA and you're subject to an additional tax, you may need to file the additional tax form. I believe that's IRS Form 5329. So we'll put a link in the show notes to that one. So again, only report these distributions. IRAs generally are a U.S. construct. Pensions and annuities, you're only going to report U.S.-based pensions and annuities effectively connected with a U.S. trade or business. If they're not, then you would report them on Schedule NEC. And again, there could be a taxable and a non-taxable amount for any number of reasons. In line 6, that's not going to be addressed here. That's reserved for future use. That's for Social Security benefits, which you would not be eligible for while filing Form 1040-NR. So line 7, capital gains or loss. So if you sell or mutual funds or stocks or business assets, you may need to calculate that on IRS Form 8949 and then Schedule D. So we'll put links in the show notes to both of those resources on both of those forms. If it's not required, you would check the box. But let's just say that he's got $10,000 of capital gains. And then line 8 is additional income from Schedule 1. So any adjustments to income, any increases in income, you would find that on Schedule 1. Let's just say that that's $1,000. Now we're going to add all of these lines, 1Z, 2B, 3B, 4B, 5B, 7, and 8. So let's see, that's 57,400, 67,400, 68,400. Now we're going to take adjustments to income from Schedule 1. So this line 10 number, that's the total amount of additional income from Schedule 1. Schedule 1 is titled Additional Income and Adjustments to Income. So adjustments to income could be things like IRA contributions, interest on student loan payments. There's a whole list of different adjustments to income that you can calculate on Schedule 1. So let's just say that that was $10,000. So now we're going to subtract this and we get $58,400. Now, itemized deductions. Most people filing Form 1040 NR are not allowed to claim what is known in the United States as a standard deduction. There are a couple of limitations, or there are a couple of countries that can do that. For example, certain residents of India can take a standard deduction instead of itemized deductions if they're eligible under the U.S.-India Income Tax Treaty. Generally speaking, though, most people cannot that are filing Form 1040 NR. So that's generally the main exception. So itemized deduction, which comes from Schedule A of your Form 1040 NR, it looks a little bit different from Schedule A of a Form 1040 because there are lesser places to itemize your deductions. So certain standard or itemized deductions that would be allowable for U.S. Residents would not be allowable here. So let's just say that that's $5,000. Now 13A, 13B, qualified business income deduction. That's known as the QBI deduction. So if you're a business owner, you may complete either IRS Form 8995 or IRS Form 8995A. One is the complete tax form and one version is the simplified version. So even if John had a part-time job on the side, under certain circumstances, he could complete one or either one of those tax forms and maybe squeeze out a business income deduction. So let's just imagine that he did that. Line 13B is an exemption for estates and trusts only. So if you're not an estate or a trust, then you can't claim it. Estates would enter $600 in line 13B. Trusts, if you're filing for a trust and the trust document requires it to distribute all income, you would enter $300. If you're filing for a qualified disability trust that's defined by the Internal Revenue Code, that would be $5,000. And if it's for any other trust, then it would be $100. So I'm explaining this. You can look up the details in our article, but John Doe is not an estate, nor is he a trust. So we're going to put 0 in there. We're going to add lines 13 and 13A and 13B, and we get $1,000 for 13C. We're now going to add that to this $5,000 here. So we get a total of $6,000 of deduction. And then we're going to subtract that from line 11. So 58,400 minus the 6,000 gives us the $52,400. So that brings us to the end of all the items of income effectively connected with a U.S. trade or business. And again, the instructions usually encourage you to check out Schedule NEC, some income that's exempted by a treaty, Schedule OI of your Form 1040 NR. So if you need to do that, be sure that you attach copies of all forms that you use to your actual tax return. So in our next section, we'll talk specifically about how the tax and credits are calculated, and then we'll go into a little bit of detail about the payments, and then finally we'll wrap things up about whether or not you receive a refund, how much you owe, and then all the signature information that you probably should be aware of. So we'll put links in the show notes to articles and videos concerning all of these forms mentioned here. So if you need to do a little bit of deeper digging, you should be able to do so. If you like our articles, please subscribe to our newsletter. If you like our YouTube videos, please subscribe to our YouTube channel. And as always, if you have any questions or comments, or if there's another topic that you'd like to see in an upcoming video, please hit me up in the comments section. Thank you very much and have a great day.